Good morning. Welcome to Risk Neutral Trading. This is my virtual trading journal. Every trading day, market futures trading day anyway, at 0800 in the morning Central Standard Time. All the times that I refer to here are Central Standard Time, and that you see on my screens. It's my virtual trading journal. I've chosen this method because I don't multitask well, and using the stream, I can capture everything on my screens, obviously in video, and then my voiceover provides insight as to what I was thinking at the moment. And that works really well. I don't have to be doing screen snapping or typing or whatever else to maintain a journal, which I believe is important. I'm not a licensed anything as far as trading goes. I got a couple other ones, but so this is not for financial or trade advice, and there is a disclaimer in the description. However, in the spirit of full transparency and accountability, I trade live almost every day that a trade presents itself on my personally funded AMP futures trading account here in Bookmap, using Bookmap as the execution platform. So any trades that I take or that I refer to or that I anticipate and narrate through the process are taken live and in real time and real money. Okay. I stream 1440p here, so it's high def. If you don't have that, look at the gear on, click the gear button on YouTube, and it should be crystal clear for you. I'm not monetized in any way with YouTube, so likes and subs, super, and drop something in the chat. That's great. What else? Guess that gets the first bits out of the way here. The reason I stream to YouTube is for two basic points. A, transparency and accountability, as I mentioned, and it is a permanent record. Second of all, it's really, it makes it convenient for me because I can then review the stream on any device. So that's pretty handy because these are stand-up desks, and I'm here for, I start around a little before 6 in the morning, and I run through about 2100, 2200 in the evening. The stream itself goes from 7 in the morning or 8 in the morning Central Standard Time now until 1500 each day. That is the cash session. Let's look at the numbers, shall we? Well, okay, let's do that. Here are the numbers out today. Mixed bag, trade balance. We had the initial jobless claims. This is kind of deceptive here to me. Previous jobless claims were 200,000, and because the forecast was 213, they're saying that the jobless claims rose to an actual of 208,000 from 200,000, but they've got it green because of the forecast. So I guess if somebody forecast 9 million, it would be a great deal. Huh? Maybe not. Anyway, this is investing.com. It's my first news source I've used for years. I prefer the layout here of the calendar for screen snapping and posting in YouTube or Discord. This investing.com only reports typical, normal economic and revenue data points and numbers, etc. Non-farm payroll tomorrow, CPI, PMI, etc., etc. Doesn't have any of the non-normally scheduled political risks, for example. You can filter it for any way you want to, You can use, look out days in advance, holidays, earnings, etc. The second source that I use is Financial Juice, and I do that for a couple of reasons. I have one thing I forgot to mention here that's pretty important. Both of these services are free. You can pay for them if you want to, and I'm sure they'd appreciate that. But my philosophy is that I want to keep everything as accessible by anybody that may participate here in the stream and not be some stupid, expensive something or another. Now, here you notice that there are the typical reports, and then all of a sudden you'll notice here that Trump is going to have a photo shoot at 9:15, and Miran is going to have something at 9 o'clock. He's been talking all morning, but anyway, you see how these are added in here, and you're not going to ever find them over here because they're not normal, expected, scheduled reports or numbers. And so I appreciate Financial Juice for adding these in, because as we have seen in the past few months, these things can be definite disruptors of our auction, out of no place. So that's a really good thing. Let's get to the pre-market now. Tomorrow's the biggie, right? Tomorrow's non-farm payroll, so everybody's kind of holding their breath for that one, I think. Here we are. Yesterday's RTH, the overnight. Up until a few seconds ago, well, and back including now, we're looking at a gap lower. And I want to be real clear about how I determine a gap, and it's probably best displayed over here on Bookmap. For me, a gap is where we open today's RTH as it compares to yesterday's RTH low or high. In other words, range. So if we were to open right here, right now, we would be in a gap low of a point or two. I've already put this gap high in here just as a precaution so I can have a little head start at yesterday's RTH low. Have no clue whether that's where we're going to open at this moment or not. But there you go. These are the micros. This is ES, NQ, my full session ES micro, which is referred to as a micro composite chart. This is a daily session, or the RTH session, I should say, and these are daily candlesticks. Wherever price overlaps, I pull the volume profile around them, and that generates a micro composite volume point of control, and these high and low volume nodes, which are represented by the red and green lines here, and then the values are over here. The high and low volume node values push automatically to Bookmap, as do the session prices. And I do both regular, the minis and the micros, same exact setup. And this is a market profile chart, which I'm sure everybody's familiar with. It is the ES only. I don't change this to micros and back and forth. It's essentially the same. And I don't say that about trading. I don't recommend trading. I don't see how people trade the micro watching the mini. The prices, levels, and everything else can be substantially different. So I don't get that, but good for them. Volume looks about normal here. Let's check. Well, a little bit higher, 111, because there was some news out. And the ATR is a 150 for a 1 minute bar. Let's look at the Bookmap, okay? This is the dome, the price ladder, the order book, whatever you want to call it. Prices, resting liquidity. This is my micro composite column where I manually transpose these values from the micro composite chart in IRT to here. Here's that, potential gap high I was talking about. And these are the high and low volume nodes pushed automatically from IRT to Bookmap. This is the full session or Globex volume profile, which started plotting last night at 1700 and will continue through 1600 today. It's not the ETH, it's the full session. And here is the RTH session from yesterday, which will reset this morning at 8:30. This is my statistics column, which is pretty important to me. I'll get into that in a minute. And these are the session prices, which I mentioned push automatically from IRT to Bookmap. And I share these freely and happily to anybody that wants them. Just drop something in the chat or, whatever, let me know. I start pushing these levels at 1700 on Sunday night through 1600 on Friday continuously. So if you could use those, let me know. It's a CSV file from Google Sheets or Google Drive, so you can just put that in either Cloud Note column or this levels indicator or whatever your program of choice is that can use a CSV for price levels. Or you could just do it on an Excel sheet, I guess. The heat map, the chart in Bookmap. Notice there's no indicator or I'm looking at something here. Okay, there's no indicators on my Bookmap or my IRT. I try to keep everything very simple, the KISS principle, right? And very straightforward, only based on price data, price levels, and probabilities. That's it. And that's how I approach the market. POC for the full session, or the RTH session up here. POC for the full session. POC is nothing more complicated than the price at which the most contracts have traded so far in the session. So far, we've traded 3,685 contracts in the overnight or the full session right there. The very split nanosecond that one of these other prices here, for example, is 3,686. This POC will move there as it just had moved from here up, right? Very simple. Mid of the RTH, can't argue with that one. The VWAP for the Globex and the VWAP for the RTH. Volume weighted average price, arguably an indicator because it is calculated. Session price levels. Here's one that's kind of confusing to some folks, and it's what I trade based on when that's the initial balance levels, high and low. They are sometimes confusing because of the naming. Initial balance is an old market profile term. All these two levels actually represent are the high and the low of the first 1 hour of the RTH trading session. Period. Nothing more complicated than that. The first 1 hour low, first 1 hour high of yesterday's RTH trading session is right there. That's all there is to it. Okay, the statistics column, which I do pay a bit of attention to here. The first thing I do is determine the open type for the day. Statistics open type, of which there are 4. And there's only 2 criteria, which I like. If we opened right here, right now, how would that price relate to the previous RTH close? It's lower, huh? And how would it relate to the previous RTH range? Well, there's the previous RTH low and there's the previous RTH high. So at the moment, if we opened right here, right now, we would be lower out of range. And what I'm going to do is I'm going to change this, and I do every day, to the correct open type. Hopefully, fingers crossed it'll last. This is pretty dicey right here. We're only 1.5 or 2 points away from in or out of gap. And now, obviously, think about it. Lower out of range is a gap down, and then a gap up would be higher out of range. So whether we get that or not, I don't know. Let's see what happens as we progress. So I first changed the title of this so that when I look back at a snap or a screenshot or the stream, I can see this title of this column and know exactly what happened in the overnight and how we went into the open. Big help. Now we're going to clear these statistics from yesterday. And then we're going to go figure out the statistics for today. Simple, once again, simple. Based on the study from IRT. Real basic. It looks back at 1,652 trading days, the most recent 1,652 trading days. And depending on the open type, we've just anticipated that the open is going to be higher out of range. Out of 1,652 days, we opened 416 days higher out of range. Of these days where we opened higher out of range, price revisited the overnight volume point of control 77.4% of those days, or 322. Overnight volume point of control. And that, campers, is exactly all there is to it. Crazy, huh? So, is this a hard and fast target? No. It's the highest, well, one of the highest probabilities of levels to be revisited, looking back over a subset of data of 1,652 days, period. That's what that means. That's probabilities, So we'll go to the next order of business, just down the list. Overnight mid, 66.6. And I'm going to be honest with you right now. I'm not going to get all carried away with doing this for every level, because I'm not convinced that we are going to open gap down. We've only got a couple of ticks to go here, and that's a little bit dicey for me. But let's go on a little bit more. One of the ones I want to do for you is the initial balance high or low, and that is 63.5. So the way I do those is, the right one. Now, the initials are, because the moment we open today's session at 8:30, this high is going to jump to the top of that price, and this low is going to jump to the bottom of that price level, and they won't be here, and I'll wonder what was there, what was supposed to be there. So as I said, I'm not going to get all hurry-scurry and blurry about getting these statistics all typed in here and then have to change them all because we jump up in the last, 10 minutes here and are not opening lower out of range, because that will change fairly dramatically the statistics. Let's check. Overnight mid is 77, overnight POC is 77.4. It's 80.8. It's not so big, but hey, I try to be accurate. So I'm gonna let that rest right now, the statistics, and let's take a look at the Let's take a look at a further look, or a little more in-depth look at the pre-market and what I suppose is going to happen out of this. Typically, and you know, not to say anything is a slam dunk, but usually when the auction closes right on its extreme, likely oftentimes and I have no idea the probability of that, oftentimes we get a continuation. The auction really hasn't finished, and pretty much that's what happened, eh? So we are essentially 100% short inventory all night. Here's the open. Here's our trade. We're short inventory all night. What would I expect for this open? Well, this has been pretty crazy times and will continue to be so, but typically when this is the case, when inventory is 100% short, I would expect responsive buying on the open to balance that inventory, adjust that inventory, take a little profit. So we'll see. I think the most important thing to remember, or to have firmly in your mind, is that nothing is a slam dunk. Do not predict anything. Trade what you see. You can anticipate something, absolutely, but don't have preconceived notions. Look at here. We're now going a little lower. So we may have, in fact, a gap low. And when we open, I'll put the gap low flag down here. I mean, so what? But there you are. And that what we're doing, if you can see, is just bouncing around this micro composite VPOC right there. Pretty crazy how that works, huh? Next order of business I need to do is something I do every day at 8:20, which is, I don't know how much longer I'll do this, but it's the TLab snap, which is this right here. And I do this every day and post it in a Discord chat room called the TLab, just to give the folks there an idea of what levels, and the folks that maybe don't have all of the same kind of charting, and you'll see why I use this methodology of journaling, because I can't do two things at once very well, and that should be pretty obvious. I hope. The TLab is, what is that? It's a Bookmap Discord chat room started by a guy named Tom B. And he's still there, still runs it, I guess, or whatever you call it, leads it or something else. It is free, and you're never solicited to subscribe to anything, even though it's, supported and provided by Bookmap. And there's a good crowd of people in there. I spent a lot of time in there years ago, and I kind of feel an allegiance. That's why I do these posts. I do numbers and reports every morning about 6, and then I post this every day just before at about 8:20. Yeah, it's it's like every Discord place. There's a continual flow of new experts coming through and stuff like that. But Tom, I believe, is in fact what he says he is, which is a professional trader with 46 years experience. And there's a lot of good people in there. Now, Tom doesn't trade live, and he doesn't call trades. He does stream like an hour and a half, I think, every day. Now it is, and but it's a rear view mirror deal. He'll go back and narrate, kind of looking in the rear view mirror up what happened so far in that morning. So that's, if that's a benefit to you and interest to you, it's called the TLab. I don't make that recommendation for any other of the Bookmap Discord sites or anything. So there you go. Let's get on to something a little more positive then. And that would be, I think it's important to be able to trade with Bookmap. And the way to do that is you activate the trade control panel. And you need to select a method you will interact with the application and trade with your mouse. Boom. Chart, only place you can trade is the chart column. Dome, the only place you can trade are the dome columns. And both is, as you might guess, both columns. Line and cancel. I've seen some random orders showing up. Next thing I need to do is activate the multi-brackets, which is how I trade. And this introduces the risk-neutral methodology to my trading. The smallest risk-neutral package you can have is a 2-lot. Needs to be an even number. 2 lots. Then you select a tick or stop size for the entire package. And the first thing you need to do, in my opinion, is the first criteria needs to be your account risk parameters. Volatility of the market. What instrument are you trading? And these values should have been planned, decided, worked out by you long before this time, long before 4 minutes to the open. Just saying, that's your homework. Anyway, after these are selected, the first risk neutral scale is automatic. It's for half of the package. Remember, I said it needs to be even. And then it is for this, it has the same number of ticks positively as the stop is negative. Then there's the runner. And you can have whatever configuration you want, however rich you are, 50 of them bad boys. If that's what you want to, that's where you're trading. So once that's done, notice we have that. We have this package selected, and I don't need any of these other tools in the multi-brackets anymore, in the trade control panel anymore, because I'm using multi-brackets. All of the metrics which are provided here are also available up here, and you can change, you eliminate or change or add or whatever you want to do here, so there's nothing or all. Therefore, I can click the button again. It'll stay open, stay unlocked. I have my metrics. I have cancel, close, and I get the real estate back. Now I'm ready to trade, and we're ready to rumble. We've got about 2 minutes to go for the open. And I think that's pretty much got us, right? Up to date. So good luck. Remember, it's we still haven't opened the gap down yet. Gap rules may or may not apply, but there are going to be some pretty wimpy gap rules if, in fact, that's what happens. I'd say we're probably going to open, unless they have a quick bump right here, right now, we're probably going to open with just a teensy-weensy gap down. And then I'll go back after the fact and fill in some of these statistics, because I like to have them in the permanent record, but I also don't like to have to do them, twice. So shoot me. And about a minute and a half. Hey, Panda. Morning. Dad's got to do some stuff right now, Panda. Dad can't go trailing after you. No, I can't go with you right now. Go see Mom. All right, let's see here. We're going to open in a minute. Now it's time for my daily yip and yap about the opening. By the way, Blue Boy over here is just a vertical line that I put on the first print of each session so that I can keep the entire session in context, in view. And it's just a visual clue for me. I look left. If I see that, I know I've got the whole session. Otherwise, I better do something about it. Stand by, baby. Okay, we're going to open in a few here. Let's see if this damn thing will reset normally, automatically. I have no idea why this is. I've given up really caring about it. Karen. The news is all out this morning except for some of this random stuff that may appear. See what I mean? I hate that. It's really annoying. Really annoying. There we go. Jesus Christ. You know, whatever this program costs is, you'd think they could get that figured out. And it's got something to do with this particular installation because it worked fine forever. And then all of a sudden, now I've got this drama going on all the time. I'm going to now change my sessions to the RTH session instead of the full session, like that. And save that. And do the same for the minis. I do this to keep the session prices and levels and their respective levels aligned. Okay, look at us go. Down, down, down we go. Come on, look at that NASDAQ. Oof. Adios amigos. Okay. So we did, in fact, open lower in range, and you can see the open right here is this little purple guy. There, no, it's VWAP. Oh, excuse me, all the pieces. So let's get out here and slap Blue Boy Jr. for the day on. There we are. Now we will continue to move. Boy, that's awful close, huh? There's the previous low, so we definitely opened gap down. We are definitely in gap rules, but come on. I don't think it's going to be such a biggie, but you never know. The gap rules are an old market profile stuff, once again, as many things are. And the short version is that if we open in a gap, and if they close the gap relatively early in the session, there's a high probability that we will trade, and prices accepted in that, you know, within the previous range, there's a high probability we'll trade across the range, or at least across the value. And what would be the opposite of that? Well, if we don't close the gap very soon, and if price is not accepted in the previous range, what's the opposite? We're likely to trade in the direction of the gap. Common sense, boys and girls, common sense. And here's our open right there. What is this? Huh? Well, I can look over here and see the open. Maybe. Pretty jammed up over here. So they officially closed the gap. Boop. And I want to be sure and repeat that my version of the gap is previous range higher low, previous RTH range higher low, as it compares to the open. And there's the open, right? So that was a long time gone. And it's already been closed and we're already trading lower. And I'm going to try to get over here and get this put in here. And this is going to be one of these guys down here. Just for the record, this is for the recording and the record. And also how I do this. Maybe that matters to anybody. And it's obviously done already, so no problem there. We can close that gap, and my workflow for doing that is changing the text of whatever the level that's been revisited to black from whatever color. So there we go. Now this is all official and accurate. And again, this is because of screen snaps or the stream or whatever else, it's accurate. And I'll start looking at these statistics now. So let's jump back to the statistics. Hopefully this works. I've not done this before, but let's look. Overnight high is 75. Overnight low. How low can you go? 36.8. Ooh. Mid. 66.6. Ooh, baby, the devil. Now, where did the mid go? Right there, I think, huh? Yeah, no. That's the RTH mid. Where'd the ETH mid go? Got to be in here somehow. In here. It's buried right under there. I'm not gonna. Yeah, 66.6. I got it in there already. Good for me. Previous close, 49.5. Why am I doing this after the fact? Because I want these as part of the permanent record, and I'm over putting all these statistics in and then having some yahoo say something and the price opens. We enter another open type, and then I need to go back and rechange everything. So there you go. Call me a whatever. Where'd previous logo? Previous high is 65.6. There's low. Previous highs are way up above us up here. There you go. And the IB high is still here, I think. Oh, that's the IB high, not value area high. Oops, never mind. That's going to be good enough for me, anyway. Previous value area low is right there, 20.4. Ah, that's a good one to put in there. That tells you, now look. This is, oh, come on. This is the previous value area low statistic, right? There it is. Previous value area, where'd it go? No, maybe I'm wrong. Previous value area low. Okay. When we open gap up. Right there. But, come on, use your head. How are we going to get, come on now. Boy, I don't like this new mouse or my old fingers, one of the two. How are we going to get up here? And we've got these values up above us. How are you going to get to 65.5 without getting through 20.4 first? Well, of course you are. That highlights the fact that these are probabilities based on the look back data set, and that's it. You know, it's not it's not it's not being delivered by a burning bush. You know, this is statistics. So there we go. Here's the IB high. There's the IB low. We'll get back to normal here. I try to keep 1 point high on the price level, so I have and obviously keep Blue Boy in view all the time. The reason for both of those things is to give, so that I can maintain a consistent sense of scale. Yeah, okay. Now what are we doing? Excuse me. Okie dokie, here we go. So welcome to the stream again. It's important to point out, for the record. Ooh, looky there. Yeah, what do you suppose that was? I can tell you what that was. That was somebody said something. Trump is in front of or getting ready to be in front of a camera photo sessions. That's likely. That's my go-to blue sky, or unscheduled political risk. Somebody said something right there. That's why you want to always have stops, targets, and brackets in the market. And if you're trading a live account, as I am here with my own money, you want to be sure that those stops and brackets are server side. You don't want to be bent over before the donkey, and prop world or wherever, you just hit the reset button. But if you're actually doing this, then you need to approach it from a little more substantial point of view, I think. Let's see if we can figure out what that was. Well, I don't see what that might have been. Fitch ratings, yeah, good. Yeah, based on hocus pocus data, it's just amazing. Something happened, and somebody said something that you can take to the bank. Notice how there were two here when I showed this a minute ago. There was a Mirren speaking up here scheduled, and now that's been lifted, and it's now only looking at Trump at 9:15. That's the thing about financial juice. It's fairly not, I don't pay for the live thing, as I said early in the pre-market, but it's it does bring these in and out of the mix, and that's really important nowadays. And that's why they've recognized and started doing it. They didn't do that before. But they recognize that we have a potential. I'll use my go-to example. This candle right here is 229 point drop on the MES. That was the result of a tweet on Truth Social at 10 o'clock in the morning. Not based on fact, but it's a reality. It's not a political comment. If you didn't have a bracket in the market and this happened out of no place, you had a really bad day. Again, no political comment, but reality. That's why services like Financial Juice are now pulling these potential risk events into the market, into their forecast or their calendar, docket, whatever you want to call it, because it's been demonstrated without any question that there is a huge potential to disrupt the auction. So I call it unrecognized risk, or I'm trying to think, I guess maybe just random political risk. I don't know what to call it. But that's what it is. And you need to be really aware of that. You need to be aware of the fact that your job as a trader, your first requirement or responsibility as a trader is to maintain your account, protect your account, preserve your account, be able to trade tomorrow, whatever way you want to say that. And if you don't recognize these things, you can have an awfully bad day. Why, Why this? Boom. Now we're up here. Why? What was that? What caused that? What was the precipitant for that? I have no idea. Somebody does, but I don't. Look at these. Look at these markets. What does that look like to you? The NASDAQ. Not even barely a breath, and down they go and continue on. This is the overnight, and this is yesterday's RTH. Remember, we're on the RTH sessions now only. So, yeah, there's that. Well, they widened out that IB a lot. Essentially 20 handles with this little maneuver right over here. What the hell was that, do you suppose? 49, 40, 10 handles. Somebody said something somewhere, and that I'm not aware of. If you are, drop it in the chat. I'd be curious to know what that was about. I don't do tweets or social media, or I don't follow that stuff, and I try to keep I find the high spin that's being applied to most, traditional types of news nowadays is just, first of all, it's fake news, whether it's really fake news, because it's just all hype and spin. And I don't like to be influenced by that. Morning, Richard. So, as a result, I keep it pretty low key here with just Financial Juice, investing.com, and I do look at ground news, not during the market necessarily, but trying to figure out some way of getting real news that's not, spun out of the universe. Had quite the little pop down there, and I don't know what caused that, Richard. If you do, I'm all ears. Or eyes or something. Morning, anybody else that comes by, just a generic good morning. Drop a thumbs up and a subscribe. That'd be cool. Put something in the chat so Richard doesn't have to just listen to me all day. It's not unusual, in my opinion, that today may be a relatively benign. Remember that we have well, let's hope it's real news. Tomorrow morning we have non-farm payroll. And back to my conversation about unexpected, random risk or whatever name you want to put on it. You as a trader should know that the non-farm payroll is going to come out the first Friday of every month at 7:30 in the morning. And that's been scheduled for years. That's the difference. There is a little hiccup there about depending on when the first day of the month is. But anyway, by and large, that's it. And it's scheduled well in advance, months in advance, years in advance. CPI, those kinds of data points. And that's what's reported with investing.com. Also on Financial Juice, but it's all that's available on investing.com. So I like that. To me, it's a sense of, normal kind of, and here's, if you don't believe me, let's look at tomorrow. Are you going to do tomorrow, or are you going to just sit here? There you go. There's tomorrow, and there's non-farm payroll. Wherever it went, right there, 7:30. They have been on this docket for years. And that's the way I like it. You can go out next week and pick a calendar. You're going to see. That'd be kind of interesting. Let's check this out. Let's see how far out it goes. Let's go out to June of 27. Okay, there's June of 27. Friday. Still doing the other one. I didn't get it right. Sorry. I must not have done something. Oh, apply. There we go. Well, my goodness, what a surprise. This is Thursday. We got to go the next day. I don't know how to do that over here, but you see what I mean? They are scheduled Well, this isn't any good either. This is still January 26th. I guess I don't know what I'm doing. Never mind. But you see the point. Unlike the random risk events. So be really on your guard. I'll have to play with that this evening. I've never done that before, actually. So hope I didn't just screw myself up. I still don't see what happened here that caused that little hiccup over there. Quite a big hiccup, actually. The Chinese and the Russians are stealing Venezuelan oil. Huh. Man, I'll tell you, it's really hard for me to understand how some of these people say that stuff. You know, Venezuela was selling their oil to the Chinese and to the Russians because we have sanctioned them, and that's how they make their money. Now America has tipped over the president and is chasing down and seizing tankers and is making comments that we're going to take 50 million barrels of their oil and do all this stuff. I'm not sure what, you know what I mean? What do you think about that kind of thing? I don't know who this guy is, but obviously he's a GOP. I don't know. It's just, that's what I mean about the crazy news, you know, and of course you can bet it was on Fox News, absolutely. That's the problem, that whether it's really true or not, you don't know, and is it all spin, you don't know. It's just like, you know, go back and listen around January 6th and 21 and ask yourself, you know, listen to what all the crap they were saying. It's the weirdest thing. The weirdest thing for me. And I realize I'm just old, I guess. Too old. I'm not too sorry that I'm old enough to have experienced professionalism and journalism and accuracy and transparency and the truth, you know. I'm not too upset that I experienced that. Well, here we go. Hi ho, here we go. Now, the great and powerful, as Richard calls him, Agent Orange, is going to be on camera and microphone at 9:15, apparently. So that's going to put some risk out there, I would suppose. Thank you, Financial Juice, for picking that up. Some of these people that just, I don't know how to say it, you know. I don't know. Never mind. Let's think about the markets. Well, Blue Boy is out there smoking cigarettes behind the barn, I suppose. Come on. Stay over here and keep it working, Blue Boy. So here we go. There's the open. Don't believe me? There you go. And gaps close. They're just flopping back and forth over the POC from the micro composite. Range got extended, but only because of whatever this was. And here we are, stuck in the middle again. This is where we, you know, had we not had this episode, whatever this was all about, and they immediately hauled us back to where they were, we would have been in about a 10-handle range, right? Which is not unusual. in my opinion. And we're coming into the 9 o'clock hour. I better make sure I've got all my other little bits and pieces organized over here. I suppose I do. Yeah. Well, if you want to apply strict or observe a strict gap rules, we closed the gap early on in the session. We were not accepted in price, and we're trading in the direction of the gap. Look it up. You know, it's from market profile in the, 80s. But it's amazing how often those old things apply. I guess that's where they came from, is because somebody who was not asleep at the switch recognized that stuff. What will that mean for the balance of the day? I have no clue. I will trade what I see based on my vetted trades, which are the initial balance trades. And they will be active and a possibility at after 9:30. And I'm going to be real cautious with the random risk band on the stage at 9:15. See if that's remains the case. Yep. Attends a photo shoot. Okay. What, Playboy? You know? Who knows? Swimsuit. What is that? Sports Illustrated swimsuit thing or something, you know? I love the cryptic things they use. And I don't know whether this is, whether this is how it's picked up by Financial Juice, what was put out by the White House or whoever put that out. Or who, but I love the cryptic, lack of explanation and definition. And I don't think you can. No, you can't. Some of these you can click on. I know you can click on any one of these and you're going to get the whole shooting match about any of them. Non-farm productivity. What the results have been looking back how many years, and what the numbers have been looking back how many years, who put it out, all of that stuff. It is real data, based on real data. And I think much more professional presentation myself. Now, whether none of these have, there's one, Fitch has got something you could look at, I guess. So, maybe is he going to be on a bearskin rug naked? Who knows? It's like, oh boy. Nothing would, the funniest part of the whole story is nothing would surprise me at all at this point anymore. Marco Rubio leading an invasion force against Cuba, and Trump attacking Greenland. I mean, what the hell? What kind of a world are we living in here? Tip over Venezuela. Big press crap about regime change. There is absolutely no regime change in Venezuela at all, period, case closed. One person has been removed from the country, Maduro. The vice president is in charge. The head enforcer, who's really the power behind the whole thing, is still there. There's been no regime change there that I know about that is obvious. So I don't understand it all. I realize it's, conspiratorially, or whatever the hell the right word is. It's a conspiracy theory, but I can't talk anymore. I got to get out more. Ever notice how every time some big event amps up with the Epstein thing, there is some massive news event which, diverts attention? I don't know if that's a coincidence, as I said, or a conspiracy theory or whatever, but I notice it when I see something like that. When I see some big deal, I've made comments to my friends and in other places here, and probably even on the stream. Well, watch out, because there's going to be something happen next. The minute some big release happens, and sure as the world, 24 hours later, we go zooming into Venezuela. And then the continual rhetoric about Greenland, and it's pretty weird. It's pretty strange. I think that all feeds back into the news cycle and the fake news stuff. The spin doctors. So it's 9:10. Do you know where your president is? He's going to be in a photo thing of some sort. I suppose it's an opportune moment here. I can take the time, as per usual, to talk about how I'm approaching trading as a business, and the thinking behind this stream and everything else. I believe that trading in the markets are basically random, and that the only way to have a successful, consistently profitable trading business that you can rely on as a business, not as a video game or as gambling or, 10 wins in a row kind of thing, is to identify a pattern which repeats frequently and the rules that qualify entry for that, and then statistically, using statistics and probabilities, capture a data set of that occurrence and determine if it has a probability and an edge and expectancy or not. If so, you lean on the law of large numbers and take every one of those instances that present in the live market. And you do that backtesting, you do all that determination of edge backtesting. So, and this is not just some epiphany that I had, this is based on every serious, successful trader that I've read or listened to. And I mean the most successful in the world, like Jim Simmons and Paul Tudor Jones and Peter Thiel and Van Thorpe and Tom Sosnoff, and, pick one. Go listen to it, and you're going to hear them talk about probabilities and the law of large numbers, typically. So that's what I'm doing. I've identified the initial balance trades, of which there are two. There's the initial balance continuation, the initial balance failure. One each for the initial balance high and initial balance low. And then I built a set of rules that I feel justifies that entry, and I'm done extensive back testing over 500 days, minimum 1,000 trades, or around 1,000 trades, a bunch of different times, like 95 or 6 times, and so that's what I'm doing at this point. Is that is the vetted trade. That's the process of vetting a setup, in my opinion. And if it sounds familiar, it's also the business model of the gaming industry from the point of view of a casino. Another brick in the wall in the favor of the system, favor of the thinking, in my opinion. Casino will never play a game on the casino floor, with the public that has not been previously identified and vetted to have a statistical edge. And they know that gamblers will win. We know we'll take stops. But they lean on the law of large numbers and manifest that edge to their bank. It seems so simple to me that it's almost, I kind of question, can it be that simple? But it isn't that trading is simple, but it's that a lot of things come into play. And one of the key important parts of the whole story is making sure that you have a statistically significant data set. And the parameters, that expectancy, your win rate, the possibility of X or N number of consistent winners and excuse me, winners and losers in a row, and that's what I'm doing. That's where we're at this point. So we're going to have the IB statistic become a thing in about 15 minutes. Now, what is the IB statistic, you ask? Okay, it's the first rule of my criteria. And the IB statistic comes from the study here. Notice that the most probable statistic in all 4 open types, looking back 1,653 you know, the most recent 1,653 trading days is the initial balance high or low. Today, there is a 97.5% probability that the initial balance high or low will be revisited by price at some point between 9:30 Central Standard Time and 1600 Central Standard Time. It's that simple. And it's at 9, and we all know, or as I've, I hope we do, the initial balance, this does not happen until 9:30. It's not a thing until 9:30 in the morning because of the definition of the level. It is the high and low of the first 1 hour of the RTH trading session. So there you go. What I'm doing now is the following. Boop. These are the rules that I've worked out for the initial balance trades. I've back-tested extensively. And what I do here now is kind of a forward testing. You'll see yesterday, the system took this trade. And there's one other one. Here is today. We don't have the pullback or continuation zones because it's not 9:30 yet. This chart is independent of the trading system. These levels are just indicators that I built so that I could have a visual clue as to what was going on. Is it happening when I think it should? Kind of a deal. Now, what I'm doing at this moment is I am sending the system to this chart. And that's where you see right here. This is an example from yesterday. This is all happening in the simulated environment of IRT. I want to be real clear about that because, as I said a bunch of times, this is my live AMP funded account funded by me. So I'm not going to have a speculative work in progress be trading live. What I do is I keep myself in the loop at a point where when I see a signal fire for the trigger in the system over here, I manually take that trade over here on Bookmap, assuming there's not something. And I realize that's not a good way to go because it interjects two things into the process that aren't good. Number one, a delay. I've got to see the trigger and then zoom over here and put in an order or not. And that always prompts me to interject some sort of discretion, which is not the point either. So that's what I'm trying to do. Yesterday, perfect example. 2 trades yesterday. There's the other one. Come on. It doesn't like doing this much. There you go. 2 trades. 60 ticks and 32 ticks. 90-something to 92 ticks. Profitable. But because of my flubbing around and the time delay to my physical entry, I took a stop on a full stop on AMP. And I can prove it. There you go. There's the IB. There's the stop. There's the time. There's the complete results of the trade. And here is that here, whichever you want to look at. I took these snaps later in the day, but this is a snap pretty close to the time that this was completed of the system. So, kind of a pisser, but I don't know. And I will say that IRT has the functionality to actually send trades live to your broker, but I'm not completely up to speed with or confident in all of the nuances around that. You use different order types, different signal names, has to everything start with a TR and whatnot. And I'm gun shy of it, to be honest with you. So there you are. Now it's 20 past. We're banging our head up here on the top. We're still below the low and down here on the IB high, and there's the RTH close. So we're smacking our head right on the close of yesterday. And if you don't believe me, there you go. There's yesterday's close. We haven't taken the close, the ETH high, or any points north. Remember that Agent Orange is on the stage. I love that one, Richard. So I just monitor and hope for the best here. Which reminds me, I'll kick on a little Mookie here. I was going to look at something else here I was thinking about last night. I don't remember if I can figure it out or not. Oh, okay. Uh-huh. I don't hear this music in my office, so if it's some random obnoxious something or another, let me know. I'm going to have to actually spend some weekend and listen to this stuff, I guess. Okay, 23 minutes past the hour. The hour of power. this is a pretty good time for my my usual don't trade toward the statistic warning. And what I mean by that is, I hope, obvious. This is the statistic. It's not 930. Yeah, we may very well trade up there and take the IB high. We may very well come up here like we've done this time, 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 and this time, and trade back down, and you get stopped out. And I say that from experience. So there you go. What, Panda? What are you doing? Want to say hi to Richard? Okay. Pretty quick now. It's going to be that time of day. All right, so welcome. All right, do you see that the levels flash across to bookmap here? That happens at 9:30. So now the statistic is hot, live, whatever you want to call it. And get Blue Boy over here. There we go. Come on, big guy. Don't be bashful. Little boy Blue. There you are. So here's the IB high, here's the IB low, and where are we? We are no place. No place, baby. Notice that the back to the test zone here, the levels have started to plot. We have no signals, no flags. It's a good thing. Okay. What do I imagine would happen? What would I imagine would happen here? Here we go again with these lines. I tell you, that's the funniest thing I ever saw going on here. So looking at the big picture and with no preconceived ideas here. Look at this thing. Talk about a consolidation, and they're definitely building a distribution up here on the top. So funny to me how these lines, boy, you could really make a case for that being something important, couldn't you? Panda, come on, baby. Well, let's see here now. I got to tell you that I would be really hard pressed to get involved with anything here. This looks pretty random to me. Unfortunately, I have a commitment to take the trades that are signaled, but I'm getting to a point where that's not getting kind of old, frankly. You see, that's where the human element can really screw up your trading. When you backtest 500 days, how the hell do I know what's, you have no idea what the context was, anything else, depending, other than the rules that were established. And I use the word rules just because that's how they're referred to in the trading system of IRT. These are considered rules. So add rule, notify rule, delete rule, update rule, and it looks back over 500 days and go, oh, okay, so I had a 60% win rate and a blah, 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 whatever it is. Boots on the ground in the moment, then your brain starts going, so I don't think I like this price action here, and I'm not sure that I would want to take a trade in that direction, and, those are all bad things if you're trying to forward test and vet a setup. I think this is just, remember me talking out loud here. And I don't know if I've mentioned it yet or not, but this stream is my virtual journal. I'm talking to myself. And by no means is this my way or the highway. Any way you have to trade that is consistently profitable, absolutely do not change and throw something in the chat there and let us know what it's all about. I'm sharing everything I do. So there you go. As I was mentioning earlier about the two vetted trades, the initial balance continuation and the initial balance failure. So they are suggested by the context of the day. The initial balance failure is just a fancy named mean reversion trade based on, named after on the IB. Mean reversion, outside in, outside in. And the continuation trade is, guess what? More expected, anticipated in a directional kind of a day. And I would have no idea what I think today is. Looks pretty. I will say this now, and this is my usual pitch that I throw out there every time this presents itself. Look at this profile. How's that look to you? Looks flat as a board on the top, doesn't it? There is no excess up here. Somebody took the top off the auction. I always expect the auction to come to a logical conclusion. So I'll be keeping an eye on that. And of course, the initial balance high is exactly on, that is the high. So there we are. Hey there. And over here. I'm just thinking about, I'm supposed to make a phone call to the state here, and didn't have any luck yesterday. I'm thinking whether I'm going to try it now before the initial balance, because I don't know what I'll do if I have to jump off and, you know, take the trade and narrate it out. I wish I could mute my phone stuff. I don't know how to do that. Assuming that we're going to actually catch one of these levels here before too long. zoom it back up here now for whatever reason and take that IB high. This looks like a pretty random day, doesn't it? Why is any of this happening? One would imagine that they're going to get this IB high here pretty quick. Now, I don't know if I mentioned this yet or not, but the initial balance high statistic, as per most traders and the IRT stat and all those things, is achieved when price exceeds the initial balance high or low after 9:30. But in my trading setup, my rules, there's a little more criteria involved. So if and when that happens, I'll elaborate. But the fact that we could well take the initial balance high here. And remember, my suggestion, don't trade to the stat. Look at how many times, 1, 2, 3, 4, 5, 6, 7, 8 times, and substantially stopped out on a majority of them. It is not a winning proposition to do that. And I'm thinking long and hard about if I will take a trade, assuming it's signaled, simply be just looking at the day, right? Just looking at the price action and where we are today and all the random weirdness that's going on. I assume that Trump is through with the photo shoot, whatever the hell that's about. And there's, of course, no political comment. It's all fine. The problem is you never know what might be said in any of those opportunities that could have a big bearing on the market. Nobody thinks that a photo shoot is going to have an impact on the markets, but that whenever there's a microphone and a camera, I feel like we need to be careful, or at least on alert. 1, 2, 3, 4, 5, 6. 6 times we're testing up to that IB high and coming down. What does that mean, in my opinion? All the boys and girls out there that are trying to pick the top and putting their stops right up there at the close or above the IB high somewhere. That's just fuel loading the boat. And notice over here at 70, we got 454 contracts sitting out here at that 70 handle, which is coincidentally the overnight high. Oh, there you go. There's everybody that was going to get that statistic that just got salt pounded in their backside. I didn't miss anything. No, look at me go. 8 touches on the IB high. Disappointing to some, I'm sure. Well, I'm guessing that they're just messing with everybody here. If you listen real close to your monitor, you can hear the giant grinding noise of retail soup. Being made here by all those little boys and girls who cannot refrain from clicking the mouse. And I can tell you right now that I am standing by. I still am of the opinion and just, experience that we're going to get excess to the top at some point in the day. Because it's just looking at it, it looks like an unfinished auction, right? So, there you go. Now, I should point out that I don't know about everybody's broker, but AMP will raise the margin requirements to 25% on open tonight at 1700 for the ETH until after non-farm payroll and whatever other numbers they got coming out. Non-farm should be it. Tomorrow morning. That includes at any point in the overnight. So if you don't want to have a rude margin call, and if your account's more than enough size, then you don't have to worry about that. But just FYI. The further we get into this, the less appealing any kind of a trade here would be to me. Mean reversion is a thing, and it could be an IB failure. 66 to 55, so 10 handles. Okay, there are several obstacles in the way that I would typically consider range requirement problems, but I'll give this one some real long thought before I do it. My baby pen. And I realize that that's discretion, but that is, it's also money. It's also my money. The system will continue to do what it's going to do over here. But whether I'm going to follow along blindly, it's cost me a couple of full stops in the last, I don't know, handful of days. And that's not the point. That violates the prime directive. And I know very definitely that one of the probably the biggest faults of traders, or a phenomenon that happens to traders, is that you suddenly get way more intelligent after you get in a trade. You know? And that's your monkey mind going crazy. I would suspect, again, you know, that this flat top is going to get repaired through this low volume area. However, whatever kind of way you want to look at it. That's not the case in the NQ, mind you. Let me point out that the NQ has got taper on both sides. They traded up to the value area low. It was rejected out and they came back down. So, divergence on the instruments here. Excuse me. And I don't know, what's it? Is the photo shoot over or something? I don't know. The Senate holds Venezuelan war powers vote. Well, okay. Okay. I don't see. And also tomorrow, really, oh, here we go. There's that IB. See, I'm busy reading the damn news and look what happened. Funny, isn't it? There we go. Did we go? Is somebody going to go? What happened here? There we are. Now we do have some excess. Now I'm all confused here. Well, to reiterate how the system would play out then, if we trade down into the pullback zone, could trigger a B, then we need to touch up to the trigger zone, and that would be a short. I'm not saying any of that's going to happen. I'm just saying that's what that's where we are. Remember what I was going to say when I noticed that they had taken the initial balance high. Tomorrow is supposedly has been designated Opinion Day by the Supreme Court, and all Supreme Court watching pontiffs are suspecting that it will be a ruling on the tariff story. So yet tomorrow could be one hell of a day, market volatility wise. I'm a little bit apprehensive here, and I'll tell you exactly why. All of these attempts across the high here, let's look at it over here maybe. All of these attempts up here on the IB high, those were people picking the top and putting their stops up here. I'm sure of it. There's a lot of fuel living up there. Now we're going to get a B signal for the for the pullback zone here, I think. We should, I guess, I hope, or something, assuming the damn thing's working right. No. No go showboat. The reason that's not a signal is because the rule says the low is below or between these levels, just as the high would be between these levels, not equal to or lower than. And again, as I explained a gazillion times, this is not the time I would ever make a change in the trade plan or the system. That needs to be done after hours in the homework. Now there's the B. The next thing would be the trigger right here, or right here. The problem I'm seeing is that we've got these levels above us, got that fuel above us, 302 contracts up here, and VPOC migration higher, and you know. What? Now it's not going to be an issue because we're not looking at it yet. Thank you, Trading God. Hi, Panda. Mom's on a big anti-snack campaign today. To be absolutely honest, what I hope is that I don't have a signal to make that I need to make a discretion call on, frankly. And since this is my journal, that's, I think, an important point to have in there. Mean reversion trades, if you are or have vetted that, have been pretty nice. Outside in, outside in, outside in, outside in. That's all they are. It's a reversion to the mean. The mean being the POC. No, I forgot. I'm sorry. Outside in. And at some point, outside in. So yeah, that mean reversion's been ticking right over. What would worry me about taking a trade in this market environment is that obviously we've been mean reversing all morning. There's no real impetus that's going to change the auction unless it's some random crap that comes out of the sky. And I don't like to be at risk in those situations. That's like having a trade on going in non-farm payroll and, you know, fingers crossed kind of a thing. I don't think that doesn't typically have a happy ending. I don't think. And there's a million things you can think about here. Baby, no, you can't have snacks, Mom. I can't even make a case for higher highs and higher lows. Baby Panda, no, let Dad watch this now. He's got to do something here. Well, the system is taking a short. Whether I think that's a viable thing to do or not is another story, but that's what's happened over there. And in accordance with my rules, I should be doing that. See what happens here at this IBI. This is discretion very definitely coming into play here. My biggest concern is all of this fuel that's up here from all these people picking the top. I'd like to see them blow up there and get those stops out. Then it would be more realistic to me. Come on, Panda, let me think. Okay, baby. Trying to do the right thing here. Now you see the difference is there was 66 was an entry and we're down at 62. One more tick down and it's risk neutral. Then who cares? Let's helmet and see what happens. And there it is. Lay down here, that's fine. My wife chases after the cats and jabbering to them in Vietnamese, and they run like crazy, and they all die laughing. They have more fun than you can shake a stick at. I would have never. It's great. It makes me feel really good. Well, this would be a situation where it was scaled. Scaled. Just. No, definitely scaled. Assuming entry was right up here at the IB high, scaled, and perhaps lower ground now. So much for my worry about the heights. This is the entry. That's the risk neutral scale, and see what happens. And obviously, I have no idea what'll happen. But we'll keep an eye on it. Now, if I'm not mistaken, that's, I think, 12 something when that little Ms. Levitt will be speaking. And just FYI, I have no issues chasing or FOMOing or overtrading or that kind of thing. So that's not a part of my. Those are not issues. I mean, I recognize very definitely that we have monkey boy. You know, we all have the monkey mind. Or whatever you want to call it, Hyde, or, you know, Jekyll and Hyde, or whatever. And it's based on our, you know, neural pathway development in DNA from way back when. Most of those innate tendencies, which kept us alive and well and got us to where we are now, through evolution, meaning selective breeding and whatnot, or selective adaptation, I guess, is the better word, don't help us in trading. You know, FOMO, monkey boy, desire to be right, fear of missing out, all those things. In my opinion, never going to get rid of any of it. It's baked in there, you know. And so what I think my approach that I try to do is be continually aware of my here and now, me here and now. And when I start feeling all those feelings, which everybody does, I believe, I think if they say they don't, they're probably psychotic or lying. I recognize them and I don't act on them. Intentionally, consciously, when I feel that adrenaline or FOMO or whatever else. This would have been a lovely trade, signaled and going, but it's not. But I'm not on it, in it, and I am not. Would I like to be in the trade? Absolutely. Would, been a struggle since this holiday and into this week. Scratch and a stop and whatever else. Which has given me pause to think long and hard on a bigger time frame that, okay, when it's times like that, don't trade. And I'm looking for parameters or criteria, session volume, things like that, because I base what I'm doing here on the backtesting. And backtesting has no room for or possibility of discretion. So if I want to have a filter that says I'm not going to take a trade when there's volatility is or volume is under X, let's say, that has to be coded into the system, because the computer will evaluate that as it does every one of these rules over every 1 minute bar. That's how it works. When is the press scrutiny going to happen? 12 o'clock. Okay. Now, White House Leavitt speaks. Does that mean it's a press conference, or does that mean she's given a speech about something? Or I wish they wouldn't be so cryptic. You know what I mean? It's like, it's so, okay, good. Yeah, I bet she can speak. Maybe it's a statement. Leavitt speaks. She was mute for 2 weeks. I mean, obviously that's not it, but there you are. Ooh, look at this. Investors, Senate says your war powers are chopped off. Wow. That's not going to go down well with the Agent Orange, I guess. I'll step away just before noon. I'm not in a trade, as you can see. The system is in a trade, and remember, intentionally, this is simulated within IRT. It's actually trading live data, but it's not going outside because there's no instrument in this code page right here. It's not going, nor is the AMP account selected. It's staying right here because I'm not warm and fuzzy with everything working as I intend. I probably would be early on, I don't know, a month ago or something like that. I saw some real unexpected and very definitely not unwanted behavior. over here when I was trying to use the portfolio feature, which is part and parcel of the live trading, and it was doing all kind of weird random things. I would enter a long 2 contracts. It would say I was short 2. Then when the T1 target was achieved, which in a long, of course, is a sell, it would go short 3. Well, that's pretty much not what I want to be having happen with the trading system, with my account. So that's why I've settled on this very less than optimum interim live forward testing idea, because it's my money, If you want to burn yours, I can give you my address. You can ship it right on over here. No problem. So the initial balance has been satisfied once again, 97.4 or whatever it was, % of the time, out of 1,652 days, 53 days. And we've achieved most of these statistics except overnight high, which is generally expected. We generally take out the overnight high or low, and we have not done either one. 75% up here of the days. This is of the days where we opened lower out of range. So we achieved the overnight high 75% of the days where we opened lower out of range. Think about that. And did not, or only achieve the overnight low 36.8%. What does that tell you? It tells me that most of the time when we gap low, we come back in and trade across them. We close the gap and trade up because we take out the IB high 75% of the time compared to 36. Interesting statistics. They're really interesting. I wish I was more profitable, but very interesting. And I expect that I will be. I mean, that's the whole point. I'm going to do something in my next round of what ifs and coding here with the signals in this trading system. At the moment, we have an A here, right? There's a failure A and there's a continuation A because it's the IB high. Now we have a B, and now we have a trigger and a trade. IB short, or failure. This A still is in force, and that is right there. So if we trade up here and hit the continuation zone, it would fire a B. Pullback zone, we'd have an IB continuation trade long. Now, we cannot have that as long as we're in a position here, because until we're flat, we can't go long another trade or enter another trade. But if this goes flat and immediately is touching right here, it can enter immediately. And what I'm going to do is, and the only way I know to do this, with somewhat systematically is to backtest the system as it is now and then change the rule so that once we have gotten either position high or low and it's exited, all flags are set to 0, not just the ones in the right now as it stands. When this position here is exited or goes flat, the A, the B, the triggers, all of the flags, all these flags within this IB failure trade will be reset to 0. And what I'm going to do is find out the difference to A, which would mean then that if we were going to have a IB continuation after this IB failure, price would have to come up and take the IB statistic properly as it does here, then to the continuation zone, then back to the trigger. Maybe that's, being anal Andy, I don't know. But the only way I know to do it is backtest the first way, make the change, backtest it with the change. And then if it's advantageous, and I'm talking about backtest over a substantial, statistically significant data set. In my case, I do 500 days, which is generally over 1,000 trades. So that's what'll be happening next. And I can tell you right now that the closer they get to Ms. Levitt's performance, the less interested I would be. And of course, there's no trade for me to take at this point because the system is in one. And so, there you go. And I don't go to the flip reverse and all that stuff. I don't go down that road either. Doesn't make for very exciting streaming or, trader TV, but it's approaching, in my opinion, and from everything I can read, etc., this is approaching trading professionally. If you listen to Sosnoff or anybody. And I'm sure there's somebody you can find that says you should trade never be out of the market. Let me know. Now here's where the rub comes in with the. I was just talking about this different signals. Here's our entry. So where's the stop? Right up here. Actually, I can actually show you that, I think. Without hopefully breaking everything. This thing really struggles sometimes. I don't know why. Also, my new mouse sucks. There's the system. Okay, let's put the stop in here. So there's the stop band, huh? This is from some other trade back over here. That's why I don't do this. That's why I don't have these levels in there. Here's and here is T3, which is, or here's T1, which is the scale right there, as it says. We can look at T2 here and see what our profit target would be. Down there. So there's the stop. There's T2. So my point was going to be that once we've traded up here and stop, it would essentially also trigger an immediate B for the continuation trade, meaning that all it has to do is drop down to the trigger zone, and Bob's your uncle, you're in a long. Would be in a long. So let's declutterify everything here and get out of there. There you go. Back down we come. Took one little peek up there. I tell you, I was just typing to a fellow over in Static here. There has got to be one buttload of stops up here somewhere. I only see about 500 resting up here, around the overnight high. But there's got to be some fuel up there somewhere where all these boys and girls that are picking that top. Look at that. Panda, baby, you gotta go to sleep, girl. I know you're exhausted, so come on, stop arguing with me. Yeah. Not predicting anything, I'm just making an observation here. Boy, I tell you, everybody in the house is either still asleep or taking a nap and sucking the energy out of the air. I tell you right now. If I remember right, the that T2 is right down here. At the which is the value area low. Look at all this crap in the road. I have all of this stuff off, right, in the on the system. So I have the POC and the levels, but all these mids and VWAPs and all that noises is gone, and that's the developing value area low is the T2 target from up here, from the entry, which was at whenever it's at 69, 66, I think. Yeah, right here. And all it is 12 points, right? So it's 66, 56, 54. Gee whiz, right there. So Well, this is a long, prolonged event, eh? look out for those stops. I gotta believe they're there. I'm just guessing. Certainly there's a pile of stuff around that overnight high, I would guess. The 72s have got about 300 of them, and, you know, they kind of step up the ladder there. All right, there's 45. I'm late, actually. I'm going to step away and go for a walk. I keep expecting we're going to get a big pop here up at least through the overnight high, which would stop out the system. I'll leave it on Bookmap, however. And there we are. When we tag this and get into these low ones over here, this string of singles, I think we're probably going to eat them up. Just my guess. That's old. That's an old market profilism for you. Again, this is simulated. I'm not in the trade on my live account, which is right over here. Nobody on third. I'll be back directly. Have a good one. Keep your powder dry. My advice is keep your powder dry. Remember, there's a press briefing or something else starting at the top of the hour. And non-farm payroll is tomorrow. So I would suggest it might be a good opportunity to keep, save your bullets. Be back soon. Have a good one. Oh, there we are. I didn't get out of here yet, but there's the B for the A. Now, if it comes back for a trigger, it's going to be a long, there'll be a long signal. Which I would think would be a more reasonable trade idea, frankly. But don't forget, it's now, not only is it Levitt, but Vance is there at the press conference, so be really careful. It's not a mistake. That is the final filter that I've got for context in the rules is preventing this long from being taken. It's signaled over here, right here, exactly, but it's not prevented here. I mean, it's prevented. There needs to be two longer trend up. So that's pretty good. What's going on here? Let's see. Yeah, well, they're just making the biggest pot of retail soup they can make, I guess. And here we are at the Open. What a surprise. What a surprise. Yeah, what do you think there? What do you think about that? That's a no-fly zone, baby. In my opinion, do whatever you want. This is a day that I will just stand back and watch. And if you're doing great, throw something in the chat. Let me know. Well, good. Power hour. Happy power hour. Welcome to the blender. I hope if you're trading that you are doing well. This is nothing more than a complete retail soup extravaganza. This is the open. We've done this and this and this and this. Chopped everybody up and gone exactly no place. This is the kind of day when it's really important for you to be able to recognize this action, I think, or at least is me, and stay out of it. That's my opinion. And I'm sticking to it, by golly. Here we are again. This is a different view. As MASCS and the doji going on over here. Yeah, so anyway, I've already gone over my philosophy and my thinking about trading as a business, not as a video game or gambling, and the fact that I approach it from only the level of, the position of price, data, and probabilities. That's where I'm coming from. So that's covered over here in the chat. I've got to be redundant for me to go over this stuff every day. It's covered in the chat, and there's a description or chapter markers in the stream. So I think that I will not do that so much every day. Now it is kind of the backtest moment. I've talked through where we've been all morning and all day so far with the system. Now, and I've also explained how this system was built to backtest the initial balance trade. And I'm able to, with IRT, I'm able to send the system to the chart and have it plot, take the trades in the live market, real data. And actually, I could have them go to my brokerage account if I wanted to, but I do not. I want them to go right here to this internal simulated account in IRT. Because I don't want to have some random thing I'm not comfortable with messing with my money. So that's why this is here. And then on AMP live funded account, I trade with replicate the trades that would be over here. Early this morning I said that I was not going to be taking any trades today because of the price action. When we got up to about here, it was just crazy. And it doesn't look like you need to have, this is where I think discretion can come into play, or where I'm hopeful to figure out a better way to filter it or to build the code. But I'm not going to just keep taking trades and getting stopped, right? In a stupid environment. That doesn't make sense. There's absolutely nothing wrong with sitting on your hands, or, there's three positions in trading. There's long, short, and flat. So this, however, is what the system has done today. 2 trades, scratch, and a stop. Now, the signals, I'm quite encouraged that the signals are firing just as expected. Not, once again, I'm not very creative, but I've named that there are 3 signals in the system, or rules in the system: A, B, and a trigger. Imaginative, huh? And so here was the IB high failure, AB trigger, and there was the trade, and it was scaled. and it took the stop right there. No problem. That's what happens. The A on the IB long or continuation trade is the same signal. So that's always going to be the same. They will always be the same. The B, now there will not be any other signals fire or be taken by the system as long as the system is in a position. Once it's flat, which it was right here, the second signal fired here, B, and then the trigger signaling along, assuming that the qualifying or the context filter, which I have put into the entry rules, is met. Now that was not met until right there. And it went short. It went long and took a stop. In the meantime, the A, no, we weren't in a trade, right? Meantime, another A and another B occurred, but no no short, which would have been here. No, not quite. Would have been close right there. But it would not fire because the system was in a trade. Now I can change those rules. I can change a lot, any of the parameters I want, but the thing is, the only way to do that systematically and intelligently, I think, and identify whether you really have an edge, expectancy, all of those things, which are the goals of backtesting. First, you must do this away from the live market. You run a backtest on the system as it is over a specific number of days. Then you make the change to the rule, run a backtest over the same days again. Is it an improvement? Is it not? If it is, you can consider keeping that in or making that change. That's the way I do it. And that's, this is my way. And I'd be really happy to hear anybody else's feedback, actually. Now, the great part about backtesting with the backtest engine like this is, in order to backtest accurately and come up with real meaningful statistics like positive expectancies, Sharpe ratio, Sotino, etc., win rate, all those things, you have to do the backtest with the exact same rules and criteria. You can't change anything. There can be no discretion. There can be, this signal was supposed to be here, but okay, it didn't quite get there, but I think it was okay. None of that crap. And all of the stops, all of the targets have to be exactly the same. Otherwise, it's not a statistically significant data set. You can't compare apples and oranges and make any meaningful determination. And this is not just me. Go, look it up. Statistically, go look it up. So that's the beauty of the system here, like in IRT with the backtest engine. You build the system and then you set up the backtest and run it, and the computer evaluates every one of these rules over every 1 minute bar back as many days as I tell it to go. And I can change this to 1 second bar if I want to, whatever periodicity I want to have. I figure 1 minute is where I usually do this. And then you can have a meaningful backtest and know if it's going to be outside the range or the possibility of random distribution, and if it's going to be has a meaningful expectancy or multiple risk-reward ratio, etc. And that's what I'm able to do here on these two trades. This is only 2 trades now. This is just the IB, of which there are 2. There's an IB continuation, which would go IB high and up we go. There's an IB failure, which is right here. We come up there, we take the IB, and then we fail and come down. And the same too for the IB low. So there's 2 for the IB high and 2 for the IB low. And that's all there's to it in this trade rule setup. Then I'll develop another one for VPOC migration, or VWAP to VPOC, or whatever it is, whatever kind of setup I end up with. The next setup to vet. So the way you do the backtest is you select the number of days. Let's choose 500. 500 days. MES, 2 contracts, RTH session, reports I want to see. Okay. Now, how long do you think it would take you to go back through manually every trading day for 500 days and evaluate every one of these rules over each 1-minute bar within those 500 RTH trading sessions? I couldn't possibly. I started out trying to do it by just scrolling back because somebody suggested that's what they did. And then I realized I couldn't make heads or tails of the chart or keep track of it. So I built these indicators on this chart, which has got nothing to do with the trading system. It's just these indicators. These are just custom indicators, which I built so that when I scrolled back, I could see what was happening. I still couldn't keep up with it. And then I discovered this. So you just click backtest. The system just went back 495 trading days. It took 8 seconds. It took 1,041 trades, 527 long, 514 short. It realized $15,533.75, and it took 8 seconds. The system reviewed every one of these rules over every 1-minute bar, and there are 218,869 bars. It's phenomenal as far as I can tell you. I mean, I'm not saying that my system is phenomenal or that I know what I'm doing phenomenally, but the capability of this is I believe, phenomenal. And there's no way I could do this physically, as I just was mentioning. And another thing, when you do this, if you try to do it physically or, yourself manually, you absolutely cannot use any discretion at all. If your rule says that this bar needs to be within this zone, it's got to be within the zone. It can't touch the zone, be out of the zone. It's got to be exactly what your rule says. Otherwise, it's not accurate or statistically a part of the same data set. It can't be used statistically. It's pretty incredible. So here we have the there's the overview. Here's the per day consolidated. There's 372 winning trades. There's 299 stops. Now think about it for a minute. 375 and 300. There's 672, 671 trades. There's 10,041. So that means that there is a difference of about 430, which are scratch. So it all totals up, and that we'll be able to see that later, but there's the risk-reward ratio. There's the percentage. The average winning trade is $66.82. Now, I will say that IRT doesn't convert this to ticks or points or whatever. I would prefer not to use dollars, but hey, this was built some time ago, and it works pretty magically as far as I'm concerned. And I can definitely do the math, from dollars to ticks. $31.19 is the average loser, and average winner $66.92. There's 9 consecutive winners in a row and 7 consecutive losers. This right here is a problem, and I'm sure that it is around the 1st of February, maybe, if I remember correctly. There should not be the largest losing trade, because the largest losing trade should be the stop loss. So there's that. Also, you can, if you really want to get into it, and you should, this is every one of 1,041 trades, each and every one of them, starting on the 2nd of, or the 5th of February, 24. The setup, the entry type, and the result, the exit types, and the result in profit or loss. Every one of 1,041 trades. And you can actually send these to the chart if you want to. Don't do it when you have live data going on, like now, and plot them. And go back and look at each one of them. And that's a real valuable thing to do. So that's how I approach backtesting. Then in order to make sense of it all, I cooked up this thing, which is each one of these lines is a backtest. There's the instrument, tick value, the setup parameters for the trade management package, or the risk neutral, the multi-bracket, and then the trades, the winners, the losers, the average, the loss, the win rate, all the stats you ever want to do, including, down here is including the standard deviation, average return, index, Sharpe, Saltino, all the different ratios, which I don't really pay much attention to at this point anymore. I mean, I'm trying to do these to figure out the primary numbers that are important to me at this point is expectancy, R factor, and risk reward ratio, and then of course the winners to losers. And a real important one for me is a consecutive winners and consecutive losers, or consecutive stops. Because if you have to sit through 10 consecutive stops in a row and still have it be within the parameters of your backtest, of your system, that gets a little trying on your soul, huh? And here's some of the most current ones that I've done in the last couple of days, just checking things out. This is December. These are December, I should say. Here's December straight up risk neutral 2 lot, as I've coded in the system and do on the pre-market and everywhere else. Multi-brackets. 21 trades, 48.18, 57% win rate, 24.2, R factor 1.14. And here's with, this is with the trail, and what happens here is the trail trigger is, at what price is the trailing stop triggered above entry, and then where does the trailing stop move compared to entry? So in this case, when we reach 12 ticks, which happens to be T1, the stop automatically trails to T1, which is 12 ticks plus entry. And you get 81% win rate and 17.25, 17 and a quarter for the expectancy, and on and on and on. Now, this is for 21 days, or whatever it was, 21 trading days. 48 trades, 52 trades. That, to me, is a meaningful way to do a back test, and why then, and now what I'm doing is, which is essentially this right here. It's the risk neutral 2 lot with no scale, with no trail. Scale, yes, trail, no. And here are the current specs. Okay, so I know that I can expect to have within the system, I should expect to have 9 consecutive winners and 8 consecutive losers. So if I have 8 stops in a row, I shouldn't think the system is broken. That's pretty tough. I should, however, expect a 53% win rate, 16.9 expectancy, and on and on and on. And I can make additions or corrections to this, or to the system, to see what improvement I have. But this is the baseline. Well, look at here, little baseline girl. Hello, Snoozy. So that's where we are. And that's backtesting in a nutshell, the way I approach it with IRT. And then, of course, the trade, that same setup is manifest over here in the multi-brackets. There is the 2-lot risk-neutral package, 12-tick stop, 12-tick runner, T1, 48-tick T2. Boom. Bob's your uncle. That's it. All right, so I'll pick up the daily recap here in a few minutes, and we'll take this into the close at 1500. Get ready for tomorrow. Now, let me just say something right now in case I forget to say it in a minute. I don't know who you trade with, your broker, whatever. With AMP futures, which I assume is pretty normal, tonight at 1700, when the ETH session reopens for tomorrow's trade, margins per the CME will be set at 25%. For the NASDAQ, the E-minis and micros, we set at 25% of the normal carry margin. And that will remain in effect until after the non-farm payroll report tomorrow morning. I think that's the only one that's within those parameters. And they'll send out an email after that margins have been reset. So in my case, if I, even though it's 1701 and I think there's going to be some little movement down here and I throw a trade on and I don't have the proper margin requirement for 25% of the notational carry, boom, margin call. Big problem. Be real careful of that. All right. All right, so let's do the recap-a-rooney here. Okay, here we go. Here is the here is the visualization of a resale soup blender. Open is buried right under here. And you see price action. If it wasn't for this big blurb down here right at the open, we would still be up in here around 10 or 11 points. Let's look at that. We traveled out of there once and then we never got back. So that's it. This is book map, of course. Session prices. If you could use the session prices, they'd be helpful. Let me know. I push them and share them freely. I start pushing these at 1700 on Sunday night through 1600 on Friday afternoon. And I share them with a lot of people free. Just drop something in the like and a sub, and then drop something in the chat, and I'll hook you right up. It comes out as it's shared as a Google CSV file, and then you can paste it in here into the Cloud Notes column or these indicators or your program of choice. So there we are. POC, we haven't really accomplished anything in terms of strategy. We did take care of the teensy-weensy little gap here that we had. That was over early. All right. The Investor RT, which is, there shouldn't be any question that was country you ought to stay away from. Well-balanced profile. Finally, look back in the stream, I talked quite a bit about, for the longest time, we were absolutely flat on the top. And my suggestion was up until right here, actually. And I said, well, we are going to extend this profile to bring the auction to a normal close and get into these string of singles, which is what we did. It's just looks, it's no prediction or any kind of magical talent. It's just, you can look at it physically. If you got an extended tail down here and you come up and here's your profile and it's just flat, there's no taper or excess to the top, pretty frequently that's going to get taken care of at some point in the day. I mean, look back at the profile here. Do you see any of these that have a flat top that stayed? Here you go. There's a poor low. That one stayed. Got picked up the next day and pretty well cleaned up, but typically they'll get addressed in the session. Just saying. This is the mini, same story, mini NQ. This is my micro composite chart, which is my high time frame. It's basically a RTH session only. These are daily candlesticks. Wherever price overlaps, I draw a volume profiler on them, and that generates a micro composite VPOC and the high and low volume nodes here, which push to book map. The POC, the highs, lows, that kind of stuff I enter manually. Session prices. Let's take a look at the volumes here. Yeah, we're up good volume today. 100%, 101%, and only 1.75 ATR at this point on a 1 minute chart. That's not too surprising. Thinking of something I was going to say, and then I got busy talking about them. Oh, yes, very definitely. Notice that on the all of the IRT charts, any of them, the header has the instrument or the product, the periodicity, and the session, the chart type, actually. So you can, if there's any question about any of this stuff, you can see it right there. If you're curious what this chart is, it's a MES, micro ES, 12-tick Renko, and it's the day session, and remember all my times are in Central Standard Time, so there you go. Okay. Now let's look at the important stuff, which is right over here. Okay, this is investing.com. It's my primary news source I've used for years, and I'm over a decade now. You can filter it for anything, anywhere, any time zone. If you're in Kuala Lumpur and you only want to follow the Nikkei, there you go. You can set it up. No problem. Again, it's free. As is my other one, which is Financial Juice. My thinking here is that, first, I don't have any problem with these ads. They don't bother me at all. I'm looking over here. Second of all, I try to make it anything I do accessible to whoever might be participating or, in the stream. I don't think it does any good for me to be showing something or talking about some resource like Bloomberg that costs, $15,000 a month. What good does that do anybody? I don't think much. So another nice part about this, there's tomorrow. And boy, oh boy, is that going to be a tomorrow. There's this non-farm payroll, as I said, 7:30. First Friday of every month. And that, boys and girls, has been scheduled for years. That's another reason why I prefer, or my first choice is investing.com. These are the economic calendar numbers that are historic and typical and expected. This has got no, random political risk involved or anything. So these are all scheduled. We've known years in advance that these reports would be coming out tomorrow at 7:30 in the morning. I think that's really important. You can do holidays and earnings and all the other stuff as well. Financial Juice, similar. They have a similar function over here, which is a calendar, the docket, and then the right side is more of a live Squawk Box. Also free. I'm sure either one of these sites would be tickled to death if you paid them, but you don't need to, and you can filter it for whatever you want. Now, one of the advantages to here, Financial Juice does include non-economic or revenue or related events that crop up during the day. These were not here at 6 o'clock this morning. Trump attends photo shoot. Percent speaks. White House Levitt speaks. These things were added in as they became aware of them at Financial Juice. And I really appreciate that, because I hope you've realized, if you've been around trading at all lately, or hopefully longer than lately, these kinds of things now in this current environment that we're in can have a huge impact on the auction, and a big impact on, if you're in a trade and you don't have proper brackets and things set up, can be a real bad experience for you. Now over here is where we will have the market on close imbalance orders show up at 1450 in about 8 minutes. And I'm not talking about any kind of political thing when I talk about the random risk story. But here you go. See this candle right here? That's 229. Notice the info box. When I go over the candle, you can see the change. 229 point drop. And that was precipitated by a tweet on Truth Social at 10 o'clock on Friday morning. Completely out of no place. perfectly fine. The president wants to do that. That's up to him, and I have no problem with that. But my point for bringing it up is, if you didn't have if you were involved and you'd exposed your account to the market risk and you didn't have stops, targets, etc. in the market, you had a really bad day, and you could have in fact lost your account. So those things, that's why I say, and I mean very seriously, that I'm real appreciative of Financial Juice for picking those things up and bringing them to our, pointing them out so that we can we can understand them. Like, look at these. Here's a screen snap, I think. Notice that there are none of them. There's the photo shoot. There's nothing with Bessat. There's nothing with Carolyn. Nobody. And this snap was at 7:16 this morning. So this, and this were all added after the fact. So I appreciate that very much. That's not not being facetious. I'm being serious. And yeah, there we go. So we're getting ready to close another day. Another dollar, another day. Huh? 30 seconds. Should see some action. Used to see a lot over here on the charts. There we go, getting ready. Boom. There's 1450. There's the market on closing balance release. Not much. Not surprising today. Look at this. Look at this profile. This thing down here, whatever this was, it fired at 8:45 this morning or 8:43 this morning, whatever that deal was. So it was some political, somebody said something. I couldn't figure out exactly what, but there you are. And here's the market on closing balance. Wow, very, 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 very light. 20 million S&P, the buy side. 524 million sell side, the NASDAQ plus or buy side 247 on the Dow, and sell side 220 million on the Mag 7. There you go. And now you know. Inquiring minds want to know. Inquire. I wonder if that's even still a thing. Or rag that one. It was a forerunner of Fox News, I guess. And this, my comments about long, short, and flat. That's not to say paralysis by analysis, but it's you need to be really, really, really aware that you're not just monkey boy hasn't taken over and you're not FOMOing and over trading and, just clicking to click and all that kind of stuff. You certainly don't want to get in a situation where you're just analyzing everything to a point where you don't take any trades. That's not the idea. But it's a place you've got to get to. And I'll be so glad when this vetting situation's over and this thing's positive and moved on to something else. It's not fun. It's not, it's not exciting. Stand days at a time. Sometimes don't take a trade. All day. I've been here since 7. I've been here since 6 o'clock, a little before 6. I'll be here until probably 8:39, 17, 1800, maybe 2100. Working on the back test and whatever else. Changes that I have in mind on the system. And I've not touched the trade. That's the joy of trading, in my opinion. And according to people that you read and hear about who are successful traders, verified, not ICT successful, but guys who have, third-party audited statements, like that Bernstein kid or whatever his name is. I forget his first name. 8 million or 8-figure trader that's verified came out of SMB Capital. Sometimes 1 or 2 trades in a month, quote unquote. But, it's loading the boat and taking bigger stuff. So it's all from where you come. And this idea that scalping is a great thing to do because gives you a lot of practice. It does, but it exposes you to the market risk on a continual basis. And if you're doing it live real time you've got commissions to deal with. If you're just, killing flies in a prop account, I guess it's fine, but consider that. So 8 o'clock in the morning, be there, be square, every trading day. The stream starts. Thanks for coming by. Appreciate it. Who's ever left, if anyone. And my virtual trading journal, different than typical, I guess, because it is real time, live, real money trading, on the spot, no holes barred, fully transparent in advance. You know, I recognize the setup starting to happen and the triggers, and when they happen, I take the trade, and it's all exactly transparent. So there you go. 5 minutes. Remember that you're the most important tool in your trading office, so you need to be rested, hydrated, not on emotional tilt. Take care of your health, exercise, rest your eyes, get out and get away from the screens. Need to have a balanced life.